please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, those were the headlines we're tracking at What's Hot, but let's start with a quick check on the day's trading action. The Lal Street showed some signs of nervousness and traded lower for a major part of the day. The Nifty, though, continued its sell-off from yesterday, but saw a sharp surge in the last hour of trade. That index managed to end above the 11,000 mark with cuts of about 0.1%. There you can see the graph on your screen there. Let's talk about the Sensex now. The Sensex too similarly saw a similar movement, but was unable to defend the 36,000 mark. There were wild swings across all indices. Let's have that on the screen now. The Bank Nifty surged due to an uptick in private bank scrips. That index was 0.5% higher at the close of trade. Mid-caps, however, continued their course correction, finding and ending more than 1% lower at the end of the trade. But all eyes, of course, will be on tomorrow's trading session, because over the last 14 years, what's happened is that markets have seen a positive session on the budget day 10 times. So it's 10 out of 14. The day of the budget last year also saw a huge rally. So how will the budget decisions impact the markets, and how will specific stocks react to tax hikes and subsidies? For more on that, Varinder Bansal now joins in with an explainer. So Varinder, help us understand what are the key developments that the market is waiting for tomorrow, and the specific stocks where we can see some movement.
Well, thank you so much. No guesses here that ITC remains the most important stock to watch out for in the budget. Even till a 10% hike in terms of cigarette taxes is something which the markets will take with both the hands. If anything comes around 5 to 10%, I think that will be a big positive for ITC, which is trading around 47% discount to HUL. So watch out for that. Oil and gas space will be important. Keep an eye on the subsidy number. The higher the subsidy means that the government is saying that we will take the brunt of the crude prices moving higher. The lower means that the upstream companies have to bear it. So that number is important. Last year it was 25,000 crores. People are expecting this time it will be 30,000 crores. So watch out for that. If it's 30,000 crores or above, then that's a good thing. If it's less than that, then you may see a red tick on ONGC and Oil India. Also, whether any excise duty cut hint is coming or not, that you have to see. If that is there, that could mean relief for OMCs. One big thing which everyone has expected since last many budget is that whether there could be a potential cut on the cess, for upstream companies, which was earlier 20%, can it be cut to 10% or not? If that comes, it's a big relief for ONGC and Oil India. And of course, CNG, LNG remains the kicker points for the government. Whether there could be a tax rebate on CNG vehicles, whether inclusion of gas under GST, these are things to watch out for. The beneficial, of course, IGL, MGL are the one. Encouraging exploration and production. Most of the usual companies like Vedanta and all could benefit. On fertilizers, watch out for the subsidy number. We're expecting 65,000 crores. But the important is if the existing subsidy backlog is cleared before the DBT. If that announcement comes in, that's a huge positive. Insurance, watch out for the life insurance companies. People are thinking that because they pay tax at 15% and other corporates pay at 30%, so whether it could be hiked in line with the corporates or not. If that happens, that is negative for life insurance companies. In terms of general insurance companies like ICICI Lombard, a new third motor law, if passed, could be positive. Real estate, everyone again, uses for the uses in terms of the carpet area getting increased. Also, the increase in deduction limit is one thing to watch out for. But otherwise, if the corporate tax is cut by 1%, you got to watch out for that whether it is above 100 crore PBT or less than 100 crore PBT. If it's 100 crore PBT, then the bigger companies like InfoAge, Maruti, Aisha will benefit. But the most important stock clearly remains ITC and some of the oil and gas companies.
Many thanks, Varinder, for that exhaustive analysis. So many sectors to watch out for as the finance minister stands up to deliver his union budget speech. On to earnings now. India's largest private sector lender, ICICI Bank, has reported a mixed set of third quarter earnings. Net profit has come in at 1,600 crore rupees, missing what the street was estimating, even as asset quality has remained stable. The bank's gross NPA came in at 7.82%, while the net NPAs showed a slight improvement at 4.2%. Let's go across to Ritu Singh, and she has the key takeaways from the bank's third quarter earnings. Ritu, tell us, how has ICICI Bank fared overall?
Profits for ICICI Bank plunged 32%, missing street estimates on the back of higher provisions and lower treasury income. Net interest income grew by 6.38%. Asset quality, however, showed an improvement, with gross NPAs coming down to 8.55% and net NPAs at 4.65% as a ratio to total advances. No divergence was reported by the bank because it is lower than the 15% threshold required by RBI to report any divergences noted by it. Slippages have come off, a trend that we've seen through FY18, and this quarter stood at 4,380 crore rupees. Recoveries are fairly healthy at 1,108 crore rupees. The drill down list has also come off slightly in this quarter to 19,062 crore rupees. The bank says it is fully provided for the first list of IBC accounts. As for the second list, only 36% provision coverage has been maintained, so the remaining coverage will have to be made up in the March quarter itself. Advances growth fairly healthy at 10%, largely led by a strong growth in domestic retail advances. Margins also stable at 3.14% overall. Means that FY18 will be a better year than FY17, and more recoveries and an improvement in turnaround in asset quality will take place as and when more resolutions take place through the IBC process.
So meeting parameters on some estimates, but on the others, ICICI Bank has missed what the street was expecting. Ritu, thanks for that. But more on the earnings front. Infra major Larsen & Toubro too came out with their numbers, and it was a good set of third quarter earnings. Let's take you through the details. The company's net profit came in at 1,490 crore rupees, beating what the street was expecting. Revenues overall grew 10%, and margins has also seen an expansion by 10.9%, so almost 11% versus 9.6% on a sequential basis, or on the same quarter last year. The biggest positive, though, for the company was its consolidated order book, which has grown 4.7%. The management has also said that it has retained its FY18 order inflow growth guidance. That's as far as L&T is concerned. But of course, the big story, the crack team at North Block is ready. The budget documents are printed and sealed, and come tomorrow, Arun Jaitley will present his 5th union budget. This will also be, remember, the last full budget ahead of the 2019 general elections. This budget will be different in many ways, especially due to the big change in India's indirect tax landscape with the introduction of the GST. And as we've been reporting for the past few days, this budget is expected to be a farm-first budget. Sources telling us now that the finance minister is likely to flag a raft of farm-centric measures, including a viability gap funding-like mechanism for agricultural procurement. Rituparna Bhuyan now joins in with all the exclusive details of what it could be. So Ritu, tell us a little bit about what the key announcements are likely to be with respect to the farm sector.
As far as the agri sector is concerned, we understand that the government in budget may talk about a scheme through which farmers will be reimbursed the difference between the selling price of an agri commodity and the MSP for that particular commodity through the DBT scheme, and a substantial amount, according to our sources, could be allotted for this new scheme. Secondly, there could also be an announcement of a agri trade policy through which there will be specific incentives that will be given for non-traditional products to be exported to specific destinations abroad. Not only that, there will also be norms to ensure that if, when and how either export restrictions like MEP or import restrictions or import ban, those are put so that there is stability as far as agri trade is concerned. Last but not the least, as far as the industry is concerned, there could be some support that could be given to warehousing and logistic related sector. A specific department is now functioning within Commerce Ministry on logistics, and the budget tomorrow could see some allocation being given for logistics sector and specifically for warehousing. Last but not the least, we also understand that very strong push by Commerce Ministry for rationalizing MAT rates on ACZs. We'll have to wait and see if the Finance Ministry agrees on that demand. With that, it's back to you.
So in all likelihood, it's going to be a farm-first budget. Rituparna there reporting on the agriculture-related expectations from Finance Minister tomorrow. But what about the wish list, the long wish list of India Inc.? Let's give you a quick roundup of what Indian businesses are expecting, hoping for from the Finance Minister.
Full tax deductions for provisions on non-performing assets to incentivize the timely and adequate recognition of bad loans, the setting up of a dedicated fund to speed up the digital payment infrastructure in the country, and tax reliefs pursuant to companies proceedings under the Insolvency and Bankruptcy Code are just some of the measures that banks are looking for in the upcoming budget.
The life insurance sector is seeking a dedicated tax exemption window of rupees 50,000 under Section 80C, and this will be over and above the existing tax exemption window here of rupees 1,50,000. Also, the life insurance space is seeking a blanket tax exemption as far as the pension policies of the various life insurance companies are concerned. As far as the general insurance space is concerned, that particular segment is seeking an enhancement in the tax exemption window with respect to health insurance premiums coming from senior citizens.
The infrastructure sector is looking for increased budgetary allocation to flagship government projects like the Sagarmala project, the Bharatmala project and smart city projects as well. It's also looking for an increased allocation to the National Investment and Infrastructure Fund or NIIF, as well as for current taxation issues with InvITs or infrastructure investment trusts to be clarified.
The big theme that India's FMCG industry is hoping for in this time's budget is revival of demand. The industry is hoping that the government will increase the income tax exemption limits for consumers, which in turn will increase the disposable income for them. Secondly, rural initiatives will in turn aid the government's efforts to double farmers' income as well as generate more employment, spurring rural demand. And thirdly, the industry is also batting for a reduction in corporate tax rates.
All what the auto sector wants is a clear roadmap on electric vehicle policy, increased infra spending and continued focus on road to help Motown sell more vehicles.
The IT services industry wants the removal of angel tax, the universal recognition of IT services as exports, and the removal of duty on technology products that don't fall under the purview of the Information Technology Agreement of India.
As you'd expect, a long wish list from India Inc. How many of those wishes will come true? We need to find out tomorrow when the Finance Minister ultimately presents his 5th Union Budget. Time for us to slip into a break. Up next, setback for Malvinder and Shivinder Singh of Fortis. The Delhi High Court holds that they have to pay Daiichi 3,500 crore rupees arbitral award. Those details when we return. Welcome back to What's On. A day ahead of the budget, some important macro numbers have come out, and let's just take you through all that. The Central Statistical Office has revealed the first revised estimate of FY17 GDP data. The release shows that the Indian economy grew at a pace of 7.1% in the last fiscal. This is largely in line with the provisional estimate of GDP that, remember, was released in May last year. Core sector data, meanwhile, for the month of December 2017 is also out, and that shows the pace of growth of the 8 core sectors that has slipped from 7.4% in the month of November to 4% in December. In particular, the key culprits for the slowdown appears to be crude oil sector that has recorded a drop of over 2% in output. Meanwhile, cement sector has been the best performing industry out of those 8 in the month of December, clocking a growth of around 20%. But the latest now in the tussle between Japan's Daiichi Sankyo and the Singh brothers of erstwhile Ranbaxy Labs. Today, the Delhi High Court has ruled in favor of Daiichi. The High Court has allowed the Japanese firm to enforce the arbitral award that was granted to it by a Singapore tribunal, remember. This basically means that Daiichi can now collect over 3,500 crore rupees from Malvinder and Shivinder Singh. For more on that, our legal correspondent Ashmit Kumar joins in with the details. So, Ashmit, clearly a legal setback. Take us through what happened in court today, and I'm guessing that the brothers would be appealing.
Well, that appears to be the natural choice at this stage. That's the setback that they're looking at, 3,500 crores. They're likely to take recourse to legal remedies. They are likely to appeal against this order in a higher court. But just to appreciate what happened today, just to look at what led to this case. In the year 2008, the Singh brothers had sold their stake in Ranbaxy for a consideration of about $4.6 billion to the Japanese drug major Daiichi. Now, 5 years after that, in the year 2013, there were some issues that began to surface. US FDA pointed out irregularities, and to settle that matter, Daiichi had to cough up an amount of $550 million. Now, it is in response to that Daiichi, in fact, had dragged the Singh brothers into arbitration in Singapore. April 2016 is when the Singapore tribunal gave that award of 3,500 crores. And then, subsequently, in May of 2016, Daiichi knocked on the doors of the Delhi High Court to enforce that arbitral award of 3,500 crores. Now, the hearing, the litigation lasted nearly 18 months. But now we have the Delhi High Court clearly holding that the arbitral award needs to be enforced here. The Delhi High Court, however, made one key observation that as far as Delhi High Court's assessment is concerned, there was no damage caused as such as far as Daiichi is concerned. But nonetheless, the arbitral award needs to be held up. 3,500 crore rupees, that's the setback that Singh brothers are looking at. Back to you.
Many thanks, Ashwin. Indeed, a legal setback for the Singh brothers. Meanwhile, TV18 Broadcast is all set to become the majority shareholder in Viacom18. Today it announced that it will be taking full operational control of Viacom18 by increasing its stake to 51%. TV18 Broadcast, which currently holds about 50% in Viacom18, will acquire another additional 1% stake from Viacom Inc. for $20 million. Brand and content license agreements between Viacom Inc. and Viacom18 has now also been extended by 10 years. Remember, TV18 Broadcast and Viacom Inc. are joint venture partners in Viacom18. Meanwhile, a standard disclaimer there on your screen. CNBC TV18, of course, is part of TV18, and this news pertains to TV18 taking full operational control of Viacom18. All right, that's all we have time on this edition of What's Up. Many thanks for watching, but stay tuned. Up next is Dalal Street Witness. Remember, wild swings across indices just a day before the budget. We'll bring you all the market action on Markets Today. Talk back. That will take all the action forward. From all of us here, many thanks for watching.